Bitcoin could come crashing down to 32K in the next few weeks after the Bitcoin ETF. India plans to ban 9 crypto exchanges, and don't buy Solana until you've seen this video. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Altcoin Buzz Alpha wants to congratulate you all on a very profitable month of November. Bitcoin rallied past $35,000, is now hovering around 44. On November 4th, we published an Alpha report and mentioned the Bitcoin targets. As we had a target in mind, we planned our November strategy meticulously, and we all achieved our targets. We had overall 61% profit in Bitcoin, 2x profit on 6 of our portfolio coins, 3x profit on our gem calls, 3 to 5x profits on 4 IDOs, and $1,800 profit on buy and sell calls. Join Altcoin Buzz Alpha for only $15 a month and get an 8% discount on yearly subscriptions. Check out the description for more details. Bitcoin is expected to correct to as low as $32,000 next month, following the potential approval of a spot ETF, according to data provider CryptoQuant. In what's being described as a potential sell the news event, CryptoQuant said that traders' unrealized profits are currently lingering at a level that historically precedes a correction. Sell the news is a well-known term in the capital markets. It describes how asset prices, leverage, and sentiment run up in the lead-up to a bullish event, only for prices to tumble shortly after. This is because astute traders capitalize on the overcrowded long trade, trapping those with leverage and forcing them to close or get liquidated as price goes against them. An ETF being approved is perceived as a bullish event, as it will open up inflows to Bitcoin from institutions, thus creating consistent buy pressure. CryptoQuant wrote short-term Bitcoin holders are experiencing high unrealized profit margins of 30%, which historically has preceded price corrections. Moreover, short-term holders are still spending Bitcoin at a profit, while rallies usually come after short-term losses are realized. CryptoQuant added that Bitcoin price may decline to as low as $32,000, which is the short-term holder realized price. Capriol Investment said that the conservative portfolio management makes sense in the lead-up to the potential approval of a spot ETF. With Bitcoin up over 60% since the ETF mania began a few months ago, and every man and his dog on X expecting an approval on or around January 10th, we must start to anticipate much larger volatility events up and down in this region. Risk today is substantially higher for long Bitcoin positions than it was just a few weeks ago. In Bitcoin's history, sell the news events are common. In 2017, Bitcoin topped out at $20,000 after the CME listed Bitcoin futures, and in 2021, the world's largest cryptocurrency peaked again, hitting $65,000 after Coinbase completed its IPO before losing ground in the following months. Bitcoin is currently trading at $42,500, having begun the year at $16,000. Also, make sure to check out Randy's TA video on our Altcoin Buzz trading channel to see how he's trading Bitcoin and alts. Ethereum co-founder Vitalik has proposed a way to reduce the load on the Ethereum blockchain and make its proof-of-stake consensus considerably simpler and lighter. On December 28th, Vitalik proposed a method of reducing the number of signatures that validators are required to make to keep the network running. Ethereum currently supports a very high number of validators, around 895,000, to try to achieve decentralization and allow regular people to participate in staking. However, supporting this many validators comes with major technical downsides, as it requires the network to process a huge number of signatures, around 28,000 per slot, which is a very high load. Moreover, supporting this load entails several sacrifices, such as limiting quantum resistance, complicated forking, and scaling signatures through zero-knowledge proofs. It also doesn't fully achieve the goal of enabling ordinary people to participate, as the 32 ETH minimum to become a validator is still too high for many. Instead of trying to make an ever-increasing number of signatures per slot work, Buterin advocated moving to a moderate solution with around 8,192 signatures per slot, down from the current 28,000. This would allow major technical simplification, make the chain more quantum resistant, and still keep the total slashable ETH high at around 1 to 2 million ETH. Slashing is a mechanism put in place to enforce good validator behavior. Buterin suggested 3 potential approaches, relying entirely on decentralized staking pools, a 2-tiered system with heavy and light staking, and rotating participation with accountable committees. The key advantage would be setting the future signature load at a manageable level, making protocol and infrastructure development much easier. India's Financial Intelligence Unit had issued compliance notices to 9 foreign virtual digital asset service providers for allegedly operating illegally and violating anti-money laundering regulations. Among the crypto service providers are global crypto exchanges ByDFI, KuCoin, Huobi, Kraken, Gate.io, Bitrex, Bitstamp, Mexi Global, and Bitfinex. According to a press release on December 28th, the unit requested the Ministry of Electronics and Information Technology to block the company's URLs. Digital asset providers operating in the country, whether based within India or offshore, are subject to specific regulatory requirements, such as registration with the Financial Intelligence Unit as a reporting entity once registered. India was ranked as the top country in Chainalysis' Global Crypto Adoption Index of 2022 becoming the second largest market by raw estimate transaction volume globally, behind only the United States. Growing crypto adoption has prompted India's regulators to take action. The country is working on a crypto regulatory framework based on the joint recommendations of the International Monetary Fund and the Financial Stability Board. The framework, scheduled to be released in 2024, is likely to include advanced KYC rules for crypto companies and require the release of real-time proof of reserves audits. Solana generated tremendous hype in 2021, with fans touting its ability to solve the Ethereum blockchain's core problem. Solana was promised to be a cheaper and faster place to handle transactions and a better springboard for decentralized finance, or DeFi, and other activities powered by smart contracts. Then came 2022 and all that pain. Things looked bleak for Solana, and let's be honest, most of crypto, but it didn't help that Sam Bankman-Fried was closely linked to Solana and its SOL token, which sank below $10. SOL was back in the 20s in October as Sam Bankman-Fried was on trial. Then all of a sudden, Solana turned into the hottest thing going on. SOL is above $100 now for the first time since early 2022, and at a $47 billion valuation, it's the fifth biggest cryptocurrency, and it was briefly the fourth biggest earlier this week. But in a recent post from Duo9 on X, he shared a deeper look into Solana's financials, saying Solana fanboys don't know they're actually paying $100 million in fees per month to use the network. SOL runs on subsidies and inflation, which equals price crashes, which equals subsidies crash, and validators leave and the chain halts. Now you know why Solana has infinite supply. Death spiral to zero. It costs $100 million a month to keep fees cheap right now. You pay for that via SOL inflation, a hidden tax. This is also how fiat money keeps you poor over time. All good and sexy in a bull market. Prices go up, everyone's happy, but that won't last. Who's going to pay in a bear market? Holders, of course, as their SOL bag devalues every day towards zero due to inflation. That or SOL transaction fees go up and actually pay validators. Which is it? There's no free lunch. This comes after a post online shared Solana's financial statements showing how the Solana Foundation makes new Solana to pay validators. Another user wrote a response saying people tend to forget how to analyze the core fundamentals of a coin when price action is impressive enough. And it has been, I won't dispute it, but the fact is that in 2 years, Solana has increased in supply from 272 million tokens to a whopping near 500 million. That's almost 90% inflation since July 2021. That inflation is happening because they print new coins to pay their validators instead of paying them through transaction fees, so the foundation kind of subsidizes those costs, but in the end, it's the users that pay anyway, with their token getting more and more diluted. Sounds a lot like fiat, doesn't it? The low transaction costs only happen because they mint new coins to pay validators, so they can keep the scheme of we got the fastest and cheapest chain. Holders are paying for that transaction either way, but in this way you pay via dilution of your own coins, aka inflation. So if this is true and that is the case, and it doesn't get fixed, it should be worth keeping in mind as we get deeper into the bull run, as it could come crashing down. That's it for your Altcoin Buzz News update. I'm your host, Cody Buffington. Thanks for watching.